We'll find out in about 15 or 20 minutes on whether the Federal Reserve will hold interest rates steady as expected. Maybe drop, who knows? But no, more than likely it will be held steady. And all kinds of other factors, though, that are involved in this. Let's get some thoughts on Jerome Powell's decision. And we're going to be joined right now by Gennadiy Goldberg, Managing Director and Head of U.S. Rate Strategies at TD Securities. Gennadiy, thanks very much for joining us.
Thanks for having me.
It's a pretty safe bet, I would say, that nothing's going to change. It's going to hold steady. What are you going to be looking for, though, with this announcement?
Yeah, it's a great question. We're looking for a cut, not this time at least. There's still room maybe in the March meeting, although that's not very well priced by markets. The market's pricing in just a basis point of rate cuts at this point, so just about less than a 5% chance. We're really looking for any hints about future meetings. We want to get a better sense from Chair Powell what exactly the Fed needs to see to keep cutting rates, whether or not they expect to cut rates down the line. The other thing we're going to be looking for is to see whether there's going to be any dissents. We do expect Stephen Myron to continue to dissent. That's basically been his MO since he's joined the board. And third and foremost, any changes to reserve management purchases. Remember, the Fed announced those back in December, and they've been doing a really great job at keeping the front end extra loose in the United States.
Okay, well, let's talk about that first. What do you think we might see, or what do you think we might hear about that?
Yeah, on the reserve management purchases, I think they're going to keep relatively mum. To be quite honest, they're doing relatively well. We expect them to keep them going at a $40 billion a month pace. Remember, this is just to grow the balance sheet with the size of the economy. We expect them to scale that down come the April meeting. If they want to scale that down a little bit sooner, the market might take that a little bit negatively because that is actual purchases that the Fed is doing, and that is taking duration out of the market, even though it's in Treasury bills. So I do think markets will be especially sensitive to that. I think net, the kind of the motto of today's meeting for Powell is going to be go 45 minutes without saying very much. Unfortunately, for the rest of us, we're going to have to listen in for all 45 minutes of that press conference and trying to decipher, really read the tea leaves there on anything we can.
And with the dissent, there is some expected. If there's more than expected, how would you interpret that?
If there's more than one dissent, I would interpret that as a little bit of fraying at the edges around the committee. Now, we know there's already fighting going on, friendly fighting, as much as central bankers can, because we're in the range of people's estimates of neutral. Most of the committee, around 70% of it, is between 275 and 3.5 for neutral. We're just above that. We're scratching kind of the upper end of that. The deeper we go, and we do expect the Fed to cut 3 more times this year, the more the Fed is going to be having that debate of, do we need to keep cutting rates, or do we actually need to stop here because the economy is doing quite well? What they really need to tell us is just what are the kind of the thresholds. Is it just the labor market softening, or do they really just need inflation to come down and actually not necessarily have a labor market softening, but just have cooling inflation towards kind of the middle part of the year?
And now it feels like with inflation, though, they're sort of not content, but they're okay with where it's been hovering for the last few years.
Yeah, I'd say cautious optimism is where I would put it. It's hovering around 3%. It's actually come in better than anticipated, as has growth, as has the labor market just in the last month or so. The data has been extraordinarily noisy since the shutdown. We're still getting a sense of how the economy is doing. So if the inflation prints come down to about 2.5%, as we expect by the end of the year, that should be a trajectory that would leave the Fed much more comfortable, much more contented to actually cut rates a couple more times to get us back to neutral. But again, a lot will depend on whether that unemployment rate continues to hover around current levels or continues to creep higher once again, and that could be a mover for them as well. Okay,
now let's talk about Powell and Trump. Powell is coming to the end of his term. Is there such a thing as a lame duck Fed, or we've heard about it for presidents and prime ministers, but for the head of the Fed, is that a situation? Is he going to stand pat, do you think, for the next little while until he's replaced, or could we see a cut from him? And then how much pressure do you think he's feeling from Trump?
I think he's feeling a lot of pressure, unfortunately. And there is a threat to central bank independence. It's been made quite clear, I would say. The issue here is it's not that the Fed is not cutting rates because of the president or vice versa. they really are doing what they think is best. And what they think is best right now is to wait and watch for more information. They're not really keen to, necessarily go ahead of time and then realize that they've made a mistake. They're going, slowly. They're feeling their way through the dark, just like the rest of us. They're going to try to give us a little bit of insight into how they're thinking about the economy. But at the end of the day, politics doesn't really play a role in their decisions. I don't think there is such a thing as a lame duck Fed chair. I think Powell commands enormous respect from the committee. And if the committee wants to cut rates, and that's the important thing, the committee is the one actioning these cuts, then certainly Powell would not stand in the way of that. And
if there are no cuts until he steps down, does that put pressure on his replacement to get in some cuts? Maybe, I mean, you say 3. Does that put pressure on the next person? It's going to put a lot of pressure on the next person, regardless. I think. I do think the president wants somebody who will listen to him quite closely, who will, basically kind of do his bidding and cut rates quite sharply, maybe more sharply than most of the members on the committee want. Okay. The issue with that is it can also upset markets. You've seen the long end of the U.S. Treasury curve actually sell off on any attempts to kind of undermine Fed independence and overcut rates, because really the markets get worried about long-term inflation really going through the roof. And investors not being sufficiently compensated. So it's a tricky position for the president right now. The latest is that there are 4 candidates to replace Powell. We have to wrap. Gennadiy, I'm sorry, but we have to wrap it up there. I ran out of time. I mistimed this. My apologies. But thank you as always for joining us on this. We appreciate it.